Hey, what's going on, traders? Fella back at it, doing a late night video tonight. This month, you guys, marks my 5th year of trading, so I had a quick hour, so I'm like, let me put a video real fast together of like the top lessons I learned in the 5 years of trading, you guys. Excuse me. So let me just get right into it, you guys. How's everybody been? How's all my traders been? You guys already know I've been busy trying to open a business, still trading here and there, you guys. Everybody who hits me up in the Gmail, appreciate it. So let's get right into this, you guys. So you guys know that this is my 5th year in trading, you guys, and I've been watching the markets for way over that, but in real money, this has like been 5 years of trading, you guys. So let me tell you my top lessons I've learned over the 5 years, not in any particular order, you guys. All of these are really important lessons to me. So they're all important. They're all equally important enough to me. I don't see one thing over another being important. I think all these lessons are very important to me, you guys. So let's get right into it. My first thing I've learned lesson is lock in profits, you guys. At least 2/3 or half, you guys. Because there's plenty of times, you guys, I can count at least maybe 50 times or 100 times over the years where I've been up 1,000 or 2 or 3, haven't taken in my profits my first year of trading, then the next day I'll wake up to being down 1,000 or 2. So I've noticed, like, I did my Excel sheets, and I've noticed that if I took my profits at reasonable prices, reasonable targets, that I would have locked it in more than once. I could have went in like 2-3 times on every trade and got more money than just being greedy. So another lesson we could take out of this, you guys, is don't be greedy. So always lock in profits. Next lesson I've learned is what, you guys? What do we always say in every video? I usually say this in every video, and you guys probably just hear this in other traders' videos. What? Plan the trade, trade the plan, you guys. Make all your decisions before any trade. If you've been trading for less than a few years, you guys, and like you're not in the discretionary area of trading yet, where you can just come to wake up and just start trading after like 10 years of trading. Like, make all your decisions before any trade. Why? Because while you're in a trade, you guys, you're making decisions off emotions. You never want to make decisions off emotions. Trust me, been there, done that. Learn from my mistakes. I lost like $29,000 before doing all this stupid stuff. So next thing I've learned is what, you guys? Don't oversize your trades, you guys. And how do we do that? Use a position size calculator, you guys. You could easily Google a position size calculator, and it'll tell you exactly what to do. There's plenty of videos on how to use a position size calculator. Basically, use a position size calculator and never risk more than 1 or 2% of your account. All this stuff might sound cliche, you guys, but these are important lessons, you guys. Next is wait for the best trades, you guys. Okay, use your advantages, you guys. Some prop firms, hedge funds, guess what? They have to trade every day. That's their job. They have to hold the markets up. They have to short. They have to hedge. You have an advantage. As a retail trader, we don't have that many advantages at home. But one of our advantages we could use as leverage is we don't have to trade every day, you guys. So what? Wait for the best trades. If you want to use like the baseball analogy, you see baseball players, they don't swing at every pitch, you guys. They wait for the best pitches, you guys. They take singles sometimes. So once in a while, they'll take a home run. But what do? The best baseball players wait for the best pitches. The best traders, you guys, wait for the best trades, you guys. You can actually make more by trading less. So use your advantages, you guys. Use your advantages. Use your advantages. Remember, wait for the best trades. I have a system where I have a five-star trades, 3-star trades, 4-star trades. I usually wait for the 5-star trades now. So let's get to the next one. Another lesson I learned is take a break when you have a big winner. So basically, don't trade every day. There's days I have, you guys could look in my videos, I have $10,000 win here, I have a $13,000 win here, I have $12,000 win here, $14,000 win there. But it gives you overconfidence. It gives me at least overconfidence. So if I see myself having a big winner, or what I've learned over the years is, okay, if I have like a $10,000 winner, okay, take like a week off or a few days off. Because in the past, if you're a person like me, if you didn't work on your patience yet, or if you become overconfident like I was in the first year or two, you're gonna go right back in the market the next day, and you're gonna think, oh yeah, I got this, is enough, and then you're gonna give it right back. Because there's a lot of people who make money in the markets, you guys, but it's about keeping it. It's about being here for the long run, you guys. Being here for the long run. So what I do, in my opinion, you guys, when you have a big winner, take a little break, you guys. Don't give it back. At least when I have a big winner, I either take a little break, or I just trade really small after that. Let's say I have a $10,000 winner and I really want to trade. I see a really nice setup, like one of my 5-star trades go off. Instead of like 10,000 shares, I'll buy 1,000. I only risk like a fourth of what I really trade. Just to keep my money, you guys. Remember, you want to be here for the long run. Especially your first year is survival mode, you guys. Always put risk first. Put your risk first. Put your risk first. Focus on risk. Next one. Don't ever chase a stock. Don't ever chase a stock. Okay, I just put this thing in here for fun, you guys, but this is real stuff, you guys. This is real shit in real life. There's 2 things we don't chase in life. What? Girls, females, and stocks. Because both you lose. If you chase girls, you lose. And if you chase women, you lose too, you guys. So we don't ever chase a stock. We don't ever chase girls, you guys. This is not like a love channel. But I know most of my guys are traders here. And most of them, most of the traders are guys here. So, guys, 2 things we don't chase. This is how I always think of it, you guys. Always think of it. I don't chase girls and I don't chase stocks. That's just put in your brain, and don't ever do them. That's like the big no-no, you guys. Okay, next here comes a bag holder frame, you guys. Do not become a bag holder. Okay, what is a bag holder, you guys? You guys could easily go to Investopedia and look up what a bag holder is. I have a video a couple years old on YouTube right now of what a bag holder is, or how to spot a bag holder chart. Look into my video collection. It'll tell you exactly what a bag holder is. But if you want to hear it real fast, it's basically when you buy a stock. Let's say I buy a stock at $10, and the next day it goes to $5, and then a week later it's at $3, and then a month later it's at $1, and I'm still holding the bag. And basically, I bought a bag of worthless stocks, and now I'm a bag holder because I refuse to take the loss. So if your plan consists of becoming a trader, if your plan is to trade a stock, don't become an investor. I'll just hold it. I'm not going to take the loss. No, I'm not going to take the loss. Because it'll always go lower. It'll always go lower. It'll always go lower. I watch stocks, you guys, like OAS. Last month, I made $2,000 off OAS when it was $3.38. Now it's at 32 cents today. So do not become a bag holder. Takes us back to the first rule. Remember, you guys, lock in profits. So don't become a bag holder. So if you want to watch my bag holder video, you guys look in my video collection and you'll see it. What is a bag holder and how to spot a bag holder chart. Next slide is no FOMO whatsoever, you guys. No FOMO whatsoever. No FOMO whatsoever. What is FOMO? Fear of missing out, you guys. 90% of traders lose, you guys. And this is a big reason why they lose. Because of fear of missing out. Now, what do I do to help me for this is just like watch the markets and just tell myself I don't even care if I see the best setups, I'm not getting in. I'm not getting in no matter what. And I'll practice and I'll sit there in front of the screens for a week or two and I'll see my best alerts go off and I won't get in. And I'll just watch it go up without me just so I can practice my no FOMO, you guys. So even if you have to do that, you have to do whatever you got to do to practice the no FOMO, you guys. It takes discipline. Discipline doesn't happen overnight. I've been in the game for 5 years and I'm still not that disciplined, you guys. And it's still tough for all the traders, you guys. And you always have to constantly work on it. Don't forget, never have FOMO, you guys. FOMO will get you a lot of trouble. FOMO, you'll chase stocks. You'll regret it later, you guys. So do never, ever, 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 ever have FOMO. Next lesson is never risk more than 2% of your account. on any trade, you guys, in every trade, no matter what. Don't get greedy. Think long run, you guys. Okay? For the first year or two, you want to think survival mode. You never want to risk more than 1 or 2% of your account. Okay? This will take you back to a position size calculator. Use a position size calculator and never risk more than 2% of your account. For example, let's say I have a $10,000 account. I never want to risk more than $200 basically per trade. So my risk would be, let's say $200. My reward would be $600. That would be like a 3-to-1 risk reward, something like that. Just for an example type thing. But never risk more than 1 or 2% of your account, you guys. Don't get greedy, you guys. Take the loss. Take the loss. All traders lose, you guys. There is such thing as normal losses. Remember that. There are normal losses. Okay? Next, is always look at the bigger time frame, you guys. Let me show you a quick example. Let's just look at the Boeing real fast. Okay, you guys see how Boeing is? You guys see how I have all three? I have the bigger, the daily time frame. I have the minute time frame, and I have the 3-minute time frame. Why do I have the bigger time frame, you guys? Because I don't want to go against the trend. So always look at the bigger time frame. I always go bigger. I watch it. I look at the daily. I look at the monthly. I look at the let's say the 4-hour chart. Okay, I could see it right now on the 4-hour chart. It's kind of starting to hold, but it's not in anything. So I'll go to, let's say, hour chart. So okay, so you don't want to trade in a vacuum, you guys. You always basically you don't want to be against the trend, you guys. So always look at the bigger time frame. Remember that, you guys. You don't want to be trading in a vacuum. A lot of traders know what this means. If you don't know what this means, it means that you don't want to be in the middle in a little suction vacuum. You want to trade the bigger picture. Like if you get in a trade on a 1-minute chart, it'd be what happened, why the pattern failed. It's because you're trading in a vacuum. Look at the bigger chart, you guys. Look at the bigger chart. Always look at the bigger chart. This is the daily. Let's say right here, okay, Walmart double topped basically right here. So I wouldn't be buying this on the 1-minute chart unless it broke this and it held this. This became new support. Let's say I'm buying the 126 right here, you guys, but I didn't see the daily chart. Let's say I didn't see the daily chart, and I'll be like, hey, why is this running to resistance? Because, hey, there was resistance back there, resistance back there. I wouldn't know why, and I would be buying the $126 breakout at a double, triple top. So always look at the daily, you guys, the hourly, the bigger time frame, you guys. Basically, use multiple time frame analysis, MTFA. Multiple time frame analysis. Remember that, you guys. And my final lesson, you guys, always read books and never stop learning. My favorite 2 books I read in the past 5 years is How to Think Like a Professional Trader, Mark Douglas. I know the slide's kind of messed up, you guys, but we'll just read along. How to Think Like a Professional Trader, Mark Douglas, you guys. That's one of my favorite books, and that'll give you the real business when it comes to trading, you guys. You guys, every trader needs to read this book. And another book I read about it, maybe, I'm not gonna exaggerate, you guys, at least 50 times. Trading for a Living by Dr. Alexander Elder. Good thing is this is on YouTube for free, you guys. And I think you can get a copy of this for like $10 somewhere. I'm pretty sure it's on Audible. So another one of my bonus lessons, you guys. I didn't put a slide for this, but we're just gonna talk about it for now. Focus on risk, you guys. Focus on risk. Focus on risk. Focus on risk. Focus on risk. Make that be the #1 lesson. Always focus on risk. So for a quick summary is what? Lock in profits all the time, you guys. Always plan the trade. Trade the plan. Make all your decisions before any trade. Next one is don't oversize your trade, you guys. How are we going to do that? We're going to use a position size calculator. Wait for the best trades always, you guys. Use that to your advantage. Wait for the best trades. Remember, you can make more when you trade less, you guys. Next one is take a break when you have a big winner, you guys. Just take a break. You don't have to trade every day. That goes back to the other ones, number 5, you guys. Another lesson, remember, you guys, don't never, ever, 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 ever chase a stock. Remember that? Next one is do not become a bag holder. I know it's easier said than done, you guys. All this takes practice and hard work. Remember that. And the next one is, remember, no FOMO, you guys. No FOMO whatsoever. No FOMO, no FOMO. No FOMO whatsoever. Next lesson is never risk more than 2% on your account. Think long run, you guys. Always put in your brain, hey, I'm going to be a trader 10 years from now, 20 years from now, 30 years from now. I'm here for the long run. Our next lesson was what? Always look at the bigger time frame, you guys. Don't be trading in a vacuum. Look at the bigger time frame. MTFA, multiple time frame analysis. Remember that? And final lesson, you guys, is what? Read books, never stop learning. And the bonus lesson was what? Focus on risk, you guys. Anybody has any questions, you guys could email me, mytradecoach23@gmail.com. Please leave a like on the videos. All my traders, good luck, you guys. I'll see you guys in maybe in a couple weeks, you guys. I'll be back trading full time. And good luck to all my traders. Happy Easter, and just peace, 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 peace out, homies. See you guys in the AM.